Hi everyone, good afternoon. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets are seeing red on the screen as we are now 35 points gone for the Nifty. The culprit could be the Supreme Court AGR verdict, post which we saw a sharp crack coming in the markets. But on to earnings then, because that's really the big mover and shaker for individual stocks. Shree Cement has just reported its third quarter numbers. Not bad. Revenues have come in at 2,848 crore rupees, more or less in line with expectations. Margins have expanded very significantly. So that's a nice uptick that we are seeing over there as well. That's come in above expectations. Profit after tax in line with expectations. Let's connect then with Mr. H.M. Bangur, the MD of Shree Cement, to talk about these numbers. Congrats, sir. It looks like a great set for Shree Cement. Let's start off first with the top line. 2,848 crores. What was the average volume growth? And of course, even if you could talk about the realizations.
Growth between December 18 and December 19, year on year, is 5%. And average realization growth per ton is 7%. Making it a total revenue increase of 12%.
I think the cement space had taken some price hikes as well, I think in the last couple of weeks, if I'm not mistaken. Have you as well at Shree Cement taken price hikes? What's the extent?
No, the price hike, if you say, it is not the real thing, because compared to the last quarter, per ton price of cement is almost come down by 3% from 4,500 to 4,400. But going forward, it will be 4,500 again. So price rise more or less is little bit difference, 2%, 3%. It is not as significant as being thought.
Oh, okay. All right. So the price hike is there, but it's not as much as you expected. Sir, what about demand? Because the rhetoric right now is, of course, of economic slowdown, activity slowing down. The PMI numbers only have just started increasing. But again, IIP, you may be noticing how it's in negative. So how do you see demand shape up going forward?
Demand in the infrastructure government expenditure is showing a little bit. And it is good. And going forward, we think January, March will be still better. We have started feeling the green shoot, and the demand is only on the positive note.
Okay, all right. And I think input costs as well have been falling, if I'm not mistaken. Some of the key input costs have been declining. What have you witnessed in the third quarter? Which input costs have fallen, and on an average, what was your raw material price like?
Our principal raw material is only petroleum coke and coal. Internationally, the price have fallen, and so our energy cost per ton of production, which is the most important, has definitely come down. And the other cost which has gone up is the logistic cost. Transportation cost has gone up because of the mix of our distribution. We are significantly in South India, where the transportation cost is high. Even in East India, the market cost is transportation rates are high compared to North. So overall, the transportation cost has increased quite significantly.
Are there any, across India, which regions are, at this point of time challenging? Which regions look particularly promising to you? And which areas have you seen most price movement?
Price movement is only one thing. It is the volume movement and the cost movement. Price movement in cement industry on an average always is taking some year to year. If you see long term, price movement will be 3 to 4%. And price movement is not a surprise. It is a little less than the inflation every year. This has been the trend for last 20 years. So 1 quarter or 1 month it may be high, which we try to look at. But next month it comes down. So overall, price should not be a surprise for cement industry. The demand is good everywhere. We are feeding good demand in East because of the very low base and very low base of consumption. East, I feel, is the most promising part.
All right, great. That's great to know. Thanks so much, Mr. Bangur, for joining in. The stock price of Shree Cement, in fact, did see quite a sharp spike as well post the numbers. Now it's just about settling in at that level of 24,600. All right, well, let's kickstart Market Fatafat, which of course is, as you know, all about flagging of those individual movers and shakers. And today we have with us Amar Singh of Angel Broking. From our research desk, we are joined by Vinny and Soumya. Good afternoon, everyone. And Vinny, I've got to start off first with you. The big news with respect to telecom stocks, but very divergent views. So take us through why Vodafone is tanking almost 17%, whereas Airtel is hitting lifetime highs.
So absolutely, Mubina. That is very, when you look at telecom stocks, you will be wondering why that. So, the companies are supposed to pay their AGR dues by March 17. That is going to cause a disruption in most of the telecom company stocks. Vodafone and Bharti Airtel both have to pay more than 1 lakh crores of these dues. Now, Vodafone is not maybe well enough sufficient to pay these dues, so that could cause some disruption in the company, and it could be a worry for the company. It will be concerning and questioning in the minds of people. Will they be able to stay afloat? So, if they do not stay afloat, they cannot pay their dues. They would have to shut shop. That will benefit Bharti Airtel as well as Jio. So most of the 3G players could switch to Bharti Airtel, while Jio only has 4G, so we could see some shift of 4G in Jio as well. So that is why we are seeing that there is an uptick in the stock in Bharti Airtel reaching lifetime highs. Also, Bharti Airtel is well provisioned to pay for this, so that is why that is not a concern. So that would be like the worst is behind them, and they could move forward and start afresh now. That's why Bharti Airtel is gaining in trade, while Vodafone is still a concern for companies, investors as well, that now how will the company carry on forward. So Vodafone tanking in trade today, Mubina.
All right, there you have it. That's, of course, telecom stocks. Amar, over to you then. Today, the Nifty Bank is seeing a significant bout of underperformance, and I suppose that's on account of the PSU banking index. What's your opinion here?
Yeah, Mubina, I would definitely agree that what we're seeing in Bank Nifty is that some selling pressure has also come in. And technically, if you look at the charts, clearly on the weekly charts and the monthly charts, there is some sort of very strong resistance for Bank Nifty on the upside towards 31,250, 31,400 zone. So there's a lot of selling pressure which is coming, and also, as you rightly said, PSU banks have also been witnessing some sell-off happening. On the downside, yes, Bank Nifty does have strong support coming around 30,650, 750 zone. So we'll have to watch out for that zone.
Okay, that's Amar's recommendation on Nifty Bank. Soumya, meantime, the rally continues in Ipca Labs.
Well, yes, and in fact, today we're flagging it off on back of a note by Morgan Stanley. Although they're maintaining their equal weight stance on the stock with a target price of 1,299 rupees per share, there's a slight positive hint that they've given in this note, saying that Ipca has stabilized its base business after recent disruption, and also they believe that the company is actually poised for mid-teen sales growth and steady margins. So the fact that from here on we might see some stability in the performance, and the fact that it's going to be crucial as to how the company performs, but nevertheless they believe that the fact that it is stabilizing, the business is stabilizing, is some amount of positivity that they're viewing as far as Ipca Labs is concerned. They also say that the stock is trading at 21 times and 18 times of FY 21 and 22 valuations. So definitely they're looking at this stock as of now, but they're maintaining their equal weight stance.
Okay, 1,451 for Ipca Labs. Remember, they had delivered their third quarter numbers as well, and since then we've been seeing a nice uptick come by. All right, and Amar, a UPL, I think this is a trader favorite as well. What's your recommendation here?
Yeah, looking at UPL, what we are seeing here is that the trend definitely is up for UPL. And technically, if you look at the chart, so clearly reflects that, yes, it's been witnessing some sort of consolidation at the same time. But overall, if you look at the long-term trend and the intermediate-term trend as well for the stock continues to trade positive. So yes, on dips, definitely this is a stock one can look at buying. For support levels, it's somewhere around 565 levels, whereas the resistance for the stock is seen around 610, 620 zone.
Okay, 589 for UPL today in trade. Soumya, GMDC, how was the quarter gone by for the company?
Well, it wasn't really a good performance. In fact, GMDC actually posted a weak set of numbers. If I look at the consolidated basis, the revenue was down by over 17%. The EBITDA was also almost down by over 48.9%, which was like 49%. So definitely, as far as the operating performance is concerned, there was a sharp downfall or degrowth here. In fact, even on the profit front, there was a degrowth of around 44%. Margins compressed heavily from 21.8% to 13.5%. So these were really a very weak set of numbers, and the street is definitely reacting to the kind of numbers that this company has posted.
We are 4.7% gone for a GMDC. Remember, it essentially is the mining and the processing of lignite and just a small bit of coal as well, but majorly lignite. Vinny, Page Industries, this stock as well is tanking. Is this one feeling the heat of the weakness in the consumption environment as well?
Absolutely, Mubina. They are, the slowdown is biting them hard. They have seen us, low offtake from the shelves as well. So, that's why a weak set of numbers overall from the company. We are seeing that, the revenues have improved. They are up by 7.5%. But let's look at the profit. They are down by around 14% on a year-on-year basis. Even the margins have declined by more than 500 basis points, and, it stands at around 17%. So, higher costs also have impacted the company, and this is some concern that we should, it is worrying that what will happen to the stock going forward. But today we are seeing that the stock is tanking in trade on the back of its weak Q3 numbers.
Okay, 4.4% gone for Page. I would like to take this opportunity to also address Future Enterprises. It's just released its third quarter numbers, and we are seeing quite a lot of volatility on the stock price. Obviously, post these numbers, profit after tax has come in at 15.6 crore rupees, and the revenues have come in at 1,468 crore rupees versus 1,469 crores. That's Future Enterprises for you, 1.6% gone. I think, and do remember, folks, Future Enterprises is essentially the recently demerged, and when I say recently, approximately 2 years ago, it was carved out, and it essentially handles the back-end operations of, your Big Bazaar, your Future Retail, among other things. 1,468, absolutely flattish when it comes to the revenues. Mind you, margins have actually expanded. I have a 14.5% uptick on the EBITDA, so margins have, as a consequence, expanded. Okay, moving on then. Stock number 7, Amar, Eicher Motors. It had touched that 22, even 23,000 rupee mark recently, but since then it's been sliding down back below 19,000, in fact 18,800. Do you see more pressure for this one?
Yeah, looking at Eicher Motors, what we are seeing is that technically, if you look at the long-term charts, I'm talking about the monthly charts, clearly show that the stock is in mixed territory. However, looking at the intermediate as well as the short-term trend, we see that there is some selling pressure which is hammering the stock lower. And as far as support for the stock comes as around 18,500, 18,700 level is a crucial zone of support for the stock. So ideally, it should hold on to those levels. Whereas on the upside, till this time, we don't see the stock consistently trading above the 19,300, 19,500 mark. The stock could be in for some selling pressure.
Okay, 2.5% gone today, and Amar believes that this one would be best avoided by traders. We will take a very short break right here on the show. Do come right back. Welcome back. You're watching Market Fatafat on ET. Now we'll continue with our countdown of movers and shakers. Take a look at Granules India. Yesterday we saw a 6% rally. Today that rally continues. It's 4.2% higher. Do remember, we did have that news with respect to a tentative approval for some of its tablets from the US FDA. And Amar, what are you making of this move? A massive rally here.
Yeah, I would say looking at Granules technically on the charts, the stock is very strong on the long term, on the intermediate term trend. And also the stock is trading at all-time highs. So clearly reflecting that there is a lot of potential in this stock. And even the short-term indicators clearly point that any dip should be used as a buying opportunity. If you look at it in February itself, it's gained more than 20%. So this is definitely a stock that should be in anyone who's interested in buying. Yes, the stock now has got good support coming around 160, 165 zone.
Okay, thumbs up from Amar on Granules India. Moving on, result candidate Soumya, ONGC.
Well, yes, in fact, ahead of the results, we're seeing a stock reaction, stocks under pressure. In fact, the street is actually expecting a degrowth both in sales as well as PAT, well, 18 polls sees a degrowth of around 13% in the sales. However, that similar amount of degrowth in the profit line of around 34% on a YY basis. Having said that, the stock prices in the recent past have actually been under a lot of pressure. In fact, realizations are also expected to remain under pressure. So as the volume growth is expected to remain low, in fact, the domestic gas prices decline has also impacted the profitability of the company. So this is a set of numbers that we're expecting. However, the street is not expecting really great set of numbers, and we might see degrowth both in profit as well as sales.
Okay, that's then ONGC for you, ahead of the numbers just at 103. But any which ways, it's been a weakish stock. Okay, meantime, Shree Renuka Sugars, big loser. But we've been talking about how there is a deficiency in worldwide sugar stocks. Anyway, Vinny, how are the numbers?
Mubina, a weak set of numbers, and revenue down by around 14%. Margins have declined. They are only at 2.6% versus 18.5% on a year-on-year basis. So that's a sharp fall in the margins. Also, they are in a loss this time of around 208 crores versus a profit last time of 311 crores on a year-on-year basis. One more concerning thing is that the liabilities of the company are more than the assets of the company. So that is why we are seeing a negative net worth of the company. And the management did say that they expect to generate operating cash inflows in the next 12 months, and seeing this negative net worth improving. So let's see how that actually pans out for the company. But today, on the back of weak set of numbers, the stock is tanking in trade today.
Yeah, big time, 7.7% gone. Now, Amar, in a Shriram Transport, we've been seeing a similar move. It's been one of those Feb movers from levels of 900 now at 1300 rupees. Would this as well be on your radar?
I would say that what we're seeing in Shriram Transport is that the stock has been trading sideways, but yes, on lower levels towards 1100, the stock has got very strong support on the upside. Somewhere around 1300, 1320, the stock has got very strong resistance. So it's more of a range play. And also, if you look at the monthly charts, I would say somewhere clearly signifies that 1300, 1320 would be a level of resistance. So I would say rather avoid the stock at the current levels.
Okay, it's at 1281 and hence best avoided at this juncture. And Samya, our earnings dhamaka of today has been Lemon Tree.
Well, yes, in fact, Mubina, if I talk about this company, although there was a degrowth of around 2% as far as the profit is concerned, that really did not translate similarly as far as the revenues are concerned. We did see a good growth of around 39%, and EBITDA, which actually reflects the operating performance, stood strong at around 66%. In fact, there was a margin expansion as well from 35.4% to 42.3%. So despite a degrowth in the profit, pretty fairly, given the fact that EBITDA and revenue both saw good growth.
Well, the PAT may have, of course, been impacted with some below-the-line items, maybe higher depreciation or taxation. Okay, but with that, we are out of time, so we'll wrap it up. Amar, Vinny and Soumya, thank you so much for joining us on Market Fatafat. But before we let you go, Prime Minister Modi will flag off IRCTC's third private train on Sunday, which will start running on the set commercial routes from the 20th of February. The new train will be named Kashi Mahakal Express, and it will run between Varanasi and Indore.
इनॉग्रेशन 16 तारीख को हो रहा है. इनॉग्रल रन 16 तारीख को चलेगी और रेगुलर सर्विस इसकी 20 से चलेगी. 20 तारीख से बनारस से ट्रेन चलेगी और 21 को शिवरात्रि के दिन इंदौर पहुंचेगी. और ये ट्रेन IRCTC चलाएगी और इसमें किराया हमने फिक्स नहीं किया है. मार्केट ड्रिवन IRCTC जैसे कि 2 तेजस ट्रेन दिल्ली और लखनऊ के बीच में चल रही है और मुंबई अहमदाबाद के बीच में चल रही है, वैसे ही फ्लेक्सी फेयर होगा. मार्केट ड्रिवन फेयर जो होगा वो IRCTC उस पर फिक्स करेगी.